Hello guys, for a new video today in Moon Trader channel. Thank you for liking, subscribing, and today we will analyze really interesting share in US stocks, which is Broadcom. So Broadcom, as you will see, this video gonna be really interesting. So I suggest to you to watch until the end and don't forget to comment and give us your opinion about what do you think about this complete analysis before the year end and what I expect in the Broadcom target for 2026. Okay guys, so as you know, Broadcom has been one of the biggest success stories of the AI boom. The stock exploded higher, and it's become a core holding for anyone betting on data center, artificial intelligence. But suddenly, in the last days, we can see that the momentum stopped. The price is falling in the stock market, and today we're breaking down why Broadcom is falling in the stock market, even though the company itself still looks strong under the surface. So at first, I want to show you that this what's happening actually in Broadcom is something common in the market. We have good results, as you see in left. We have really good results, a revenue beat for the moment. EPS and per share beat, it's incredible. And we have the AI revenue surge plus 74%, which is an incredible result. But the price is falling, as you see in the right. Everything is red last week's in the Broadcom. But here is the key thing many investors miss. Stocks don't move on results. Yeah, guys, as you hear, they move on expectations. Okay, and that's a really important point to have in mind because Broadcom wasn't being compared to last year, it was being compared to a future where everything goes perfectly. And once the markets realized that perfection might not happen, the stock repriced very quickly. Okay, guys, so I want to show to you that management hiked the dividend by double digits. Okay, so now they're growing dividends. Okay to know. Um, but the most important thing, I think, it was about margin because the biggest concern actually in the Broadcom is the margin pressure. The broadcast AI chips and custom silicon are growing fast, but they are more expensive to design, manufacture, and support, and that means lower gross margins compared to some of uh, Broadcom's legacy semiconductor and software businesses. So management warned that as AI becomes larger percentage of total revenue, margins could flatten or even dip in the short term. So to long-term investors, that may sound reasonable. To short-term traders, that's a warning sign. So Wall Street hates the idea revenue of revenue growing faster than profits, especially when stock is already expensive. And it's the case for Broadcom. So another critical reason is crashing is valuation. So before the sell-off, Broadcom was priced like an unstoppable AI machine. It's an incredible stock, etc., etc. And stock was trading as premium that assumed years of flawless growth, expanded margins, and zero execution mistakes. So when stock reaches that level, it becomes very fragile. Even a small change in guidance, even cautious wording from management can cause the massive sell-off. And that is exactly what happened in our case. So it simply didn't exceed expectations, but enough to justify how high the stock had climbed. Okay, so that is what we call the overbought markets. For guys who are not familiar with markets, now we are the investor psychology. We are always talking about this one, market expectation, and about market expectation, the we add this investor psychology in the mix because many shareholders were sitting on huge gains, and once stock started slipping, selling accelerated. Traders didn't want to be at last ones out, and at the same time, many has been rotating out of high growth, high valuation tech stock and into safer or cheaper areas of the market. When insiders sell shares, even for normal reasons, it adds more fear, and the result is rapid drop driven by emotion and positioning than by fundamentals. So, fundamentally, why Broadcom actually crashing? Not because the company itself is broken, but because expectations were too high. We have today the margin concerns, the extreme valuation, and profit taking, which unfortunately impact the market share. So now the real question isn't why the stock fell, it's whether Broadcom can prove that AI growth will eventually lead to higher profits, not just higher revenue. That answer will decide whether this drop is buying opportunity or starts of longer correction. So that's the total view of the stock fundamentally. It's just market expectation which is traduced by crash in prices. But now the most important thing is what the market is telling us technically. And for that we're gonna see the chart, and the answer we're gonna look for is will the crash will continue or not, and where the levels to targets of buying and selling the share of AVGO, so Broadcom share. Now, the first thing which is really interesting that you can't find, I think, anywhere in YouTube videos, in other analyst points of views, that's what we call the correlation. The correlation of Broadcom with other markets. What does it mean? Correlation is that when X and Y shares move together in same direction. And here you have CC, so which is correlation coefficients. And like you see, all over the year, it was at 1 with NVIDIA. Okay, it's incredible to see, guys, and that's really important point of view, because that means that every time the NVIDIA was moving in the same direction with Broadcom, that means that they move in same direction. So that is what the correlation is showing us. And that is an incredible point of view, because now we're seeing that in September we lost this correlation. And that is exactly why the market started falling for many reasons, but that's one of the most red flags we have identified, and you should have identified at the moment and start selling the price. because that's red flag. That means what? That means that traders who are doing delta or hedging strategies with Nvidia, buying Nvidia, selling Broadcom, etc., will not find the Broadcom share interesting, so they're gonna quit the markets, and that is exactly what happened. What happens here? So now we have the correlation, which is at 0.4%, which means that we have no correlation. Every market is moving as its own. So that's the first thing I wanted to show you, because that's we're gonna help you think as professional trader. So that is the first point, which is really interesting that I wanted to show to you. The second point is technically what the market is doing. So we have now bullish trend, and now the market is moving in what we call the consolidation channel. So the market is doing nothing. It's going up and then it comes back to this level of support at 320. I will draw it to you. So we respected this level and then the market comes back higher. So for me, clearly it's showing that the price is correcting higher. So the bullish momentum is rebuilding itself, which is good sign for the share. So where I expect the markets will go in the next few days, I expect comeback at this level, which is 411, which is the high level of the share stock, and I expect that we will come back to this level in the next few days, which gonna represent, we check that, 15 or 17% rise. That's good profit, guys. If you want to invest now in the Broadcom, it's a good level to buy, because technically we have the opportunity right now to go in. I want to show to you also the MACD indicator, which shows that we are in the end of the bearish momentum. It's not bullish for now, but we have two lines that will cross each other in the next few days, which is a bullish sign that we will have in the short term. So before we have this bullish sign, it's better to anticipate and go in the markets for the moment. So that's the second signal I'm using. And third one will be the RSI, which is neutral. We are not in oversold, or we are not in overbought markets in the daily time frame, which indicates that the consolidation will continue. So it's not bearish, we are not in overbought, so that's a really comfortable signal. And my expectation is that the price will gonna consolidate in the two levels between 320 and 411 in the next few days. So as you see, I think that good strategy for the moment is to play the consolidation. Don't go bullish, don't go bearish. Just stay calm, stay focused, and stay playing in this consolidation channel. So yeah, I think this analysis was global. We analyzed the fundamental aspects of why share is falling. Should we worry about that or not? And the answer was clearly no. Don't worry. It's a normal correction because price is reaching high levels, 411, and then it's normal. We will have some of crash, but results stay really satisfying for Broadcom share. So that is a key element to not forget. And then we saw the technical analysis to understand what the buyers and sellers are doing, what is the psychology of the markets, and we can see that there is no big fear, with many indicators showing that the momentum is normal, and we don't have some over sold feeling now in the market. So that's good points of view to have before investing, before selling or panic selling. So I recommend no worries. Price is clearly consolidating for the moment, and there is no worry indicator for the moment. So yeah, don't hesitate to share your point of view in the comments, and if you like the content, I can go deeper in the analysis, in the technical analysis of the stock in the next few days if you like the content. So yeah, thank you for liking, subscribing, and thank you for guys who watch it until the end. See you guys for a new video this week. Bye bye.